Ladies and gentlemen, good day, and welcome to the HPL Electric and Power Limited Q3 FY23 earnings conference call, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mudit Kabra from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Lizanne. Welcome everyone. On behalf of Elara Securities, we welcome you all for the Q3 FY23 and 9 months FY23 conference call of HPL Electric and Power Limited. I take this opportunity to welcome the management of HPL Electric and Power, represented by Mr. Gautam Seth, Joint Managing Director and CFO. We will begin the call with a brief interview by the management, followed by a Q&A session. I will now hand over the call to Mr. Seth for his opening remarks. Over to you, sir.
Thank you, Mudit. Good afternoon, everyone, and I hope all of you are doing well, and thank you for joining us at the HPL Electric and Power earnings call to discuss the financial and operating performance for Q3 and 9 months of FY23. To begin with our financial performance, Q3 and 9 months of FY23 recorded a good growth for the company. I'm pleased to inform you that the company registered a strong year-on-year performance, where revenue grew by 31% in 9 months to 900 crores compared to 689 crores in the previous year. The quarterly revenue also increased by 8% in Q3 to 302 crores. EBITDA grew by 41.26% year-on-year in 9 months to reach 112 crores. EBITDA margin expanded by 94 basis points and stood at 12.48%. As far as our business segments are concerned, the metering and systems segment registered a robust growth of 60% year-on-year in 9 months FY23 and 46% growth in the Q3 FY23. The consumer and industrial segment registered a growth of 8% in the 9 months of FY23. Metering and systems delivered a robust performance this quarter. We look forward to remaining bullish and capitalizing on the smart meter segment that is evolving to demonstrate huge market demand. We are positioned at the forefront of this segment and continue to grow with new inquiries and considerable orders. The growth prospects in both the metering and systems and consumer and industrial are looking promising for the business. The company is well positioned based on the financial performance of this quarter and the 9 months. We are focusing on business expansion and participating in fast-paced development that the country is going through. We are already receiving regular orders of 5G rollout and are hopeful of crossing over 150 crores business in the near and medium term as per our earlier guidance. We have been consistently making investments in our R&D and innovations, culture building and training throughout our organization at every level and in every function. All these developments are making us stronger and more resilient to cater to the coming opportunities. We are beginning to expand our capabilities by placing a greater focus on our product innovation in the market. We are in line with our set goals and shared guidance for this financial year. The company is constantly working to strengthen its footprint in the market through our product portfolio, which is nurturing quarter on quarter. Apart from that, we are diligently working to enhance our dealer and retailer network for a better penetration, especially in the Tier 2 and Tier 3 markets. Currently, we have over 45,000 plus registered retailers and over 900 authorized dealers. In the present moment, we have a healthy order book of over 79 crores, which we anticipate will drive the business in future. Moreover, with the tender and inquiry pipeline, we anticipate the order book to be strengthened further very shortly. We have enhanced our product portfolio in each of the categories, which will be on display in the forthcoming event later this week in Delhi. Looking at the next quarter and the future, our growth strategy is centered on increasing market share, generating the healthy profits, acquiring new customers, and penetrating further into promising markets. We are doing this by introducing greater operational and financing efficiencies within our business. We are committed to drive forward better brand differentiation through innovation in our business strategies. So I think with this, we can go ahead on the Q&A.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman from Karwa Investments. Please go ahead.
Oh, yeah, sure. Thank you. Am I audible, sir?
Yes, Aman, please go on.
Yeah, sure. First of all, congratulations on a good numbers, sustainable numbers. Sir, I had a couple of questions. What type of market growth are we looking in electrical and metering segment going forward, sir? And in terms of percentage, what are we looking on a CAGR basis?
Yeah. So by electrical, you mean the consumer and the industrial part, or?
Yeah, consumer and industrial parts.
Yes. So, going forward, first I'll just take up the metering. So like in the first 9 months, we have seen 60% growth in the metering. And we would continue to see the growth happening almost quarter on quarter basis and then going forward. So let's say looking at the next 15 months, the fourth quarter and the next year, I think metering is set to grow pretty high in the sense that we already have an order book of 504 crores in the metering. There are a couple of orders or tenders where we are very well placed, and we do expect orders coming in very shortly within the Q4 and some orders even coming in the first quarter. So in terms of the tender pipeline and the inquiries which are there in meters, we do anticipate the growth coming through. Now, if you recall, there has been certain, the electronics and the semiconductor supply issues, but I think those are also now at a much better level. So in terms of execution also, we have strongly been growing almost quarter on quarter for the last 3 quarters. So in terms of growth, we would definitely see even going forward a strong double-digit growth. Now, coming to the consumer and industrial part, the last 2 years have been pretty good after the first and the second lockdowns. We have seen a steady growth in this segment. Unfortunately, only in the last 4 months, we have seen certain stagnation happening at those, and the growths are not happening in the consumer and industrial. So now, if you go back, last year was a high base for the consumer and industrial, so that is one reason. But nevertheless, the growth has not been there. But we have seen within the third quarter, the October, November was slow, but December, I think the business really picked up at that time. Even January has been fairly better. So I think in the Q4, we would come back probably to at least a double-digit growth happening. Next year again, because broadly, if you see the overall parameters and the way the consumer and industrial business is structured, where we have a very strong product portfolio. There are a lot of new products being launched in the current month.
Correct.
So in all aspects, we do see ourselves growing a little ahead of the market, and in fact garnering the market share. The last 2 years, we have seen certain steady growth, but I think what has happened is a little more temporary, but I'm sure the growth would come back, and that also would be at least a double-digit growth going forward, at least in the next.
Going forward, Now we are currently doing towards 12 to 15% of EBITDA. Going forward, when volume also comes in, do we see that EBITDA margin to be the same levels, or are we seeing it to move forward to 20 to 25 margin levels?
So currently, if you look at the type of business we are here again, I will deal it a little separately for both the divisions. If you see the consumer and industrial, anything around 11-12% on the EBIT margin, because you have to realize that wire and cable is also there, which is much more. Yeah, sorry.
And metering segments?
Yeah, I'll just come to that. So if you see the, in combination, about 11-12% is currently the way we look at it. That's where it is. In meters, our EBIT margins are even higher of 13.5-14.5%. Now, as the smart meters comes in a bigger way, I would say initially the EBIT margins could go up, but that would happen when the large part of business starts shifting all to the smart meters.
Yeah, sir. The next question, sir. Power Grid has recently announced a tender of 1 crore smart meters. Their plan is to take it out in a rental basis from companies and then rent it out to the discom companies who are then distribution companies. Are we seeing it to as in be for rental or a sale, sir? Are we seeing it for a sale purpose, or are we also planning the rental purpose?
No. Currently, if you see the major part of business, what we are looking at, we are focused on, supplies to either the electricity boards, to the distribution companies, and also to the AMI-SPs. So, although HPL Electric and along with its subsidiary Himachal Energy, both are approved as an AMI-SPs, but we don't. But we are not actively participating there, picking up the orders directly. Because if you see, there is the payments are structured in 8 years. It does involve a lot of initial capex happening and the business cycle. So, however, our key focus being the smart meter manufacturing and including the deployment. So that is where we are mainly focused on. But in that also, if you look at most of the AMI-SPs who are participating, we are approved with them. Or rather, they are approved using our meters as a test case for approvals here.
Okay, sir. And we just wanted to know what is our current level of capacity which we are running at?
In meters, I would say there is definitely there's an improvement in the capacity utilization in the last quarter. But roughly, I would say anywhere between 65 to 70% is something what we are there. Now, these are again, I've said it number of times in earlier calls also that these, the capacities can be taken on a little flexible basis because, the upside, to do the upside is much more easier in terms of putting in certain resources in terms of manpower or even working on 2 or 3 shifts. So, although some part of our capacities are running on 2 or 3 shifts, that is mainly the injection moldings or even certain continuous processes. But overall, we are doing that. But apart from that, we are also of late, in the last 6 months, we have been investing into certain kinds of automation. And that is again going to give us a better output in terms of the manpower and in terms of
in-house R&D, or are we doing it in JV, sir?
No, these automations I'm talking about is in the manufacturing process. So in terms of testing, so there are a lot of areas now which are more continuous processes, which can be done by even unmanned or even with
and
the
do we feel the need of adding shifts, as you mentioned, sir, adding more workers into the production side?
Like if you see
the need of it?
Yeah, so already that is happening, and it depends on the production and the supply schedules what we are having. But if you look at what we were doing last year and then even in the first quarter, and if you see the third quarter, definitely there is a big jump in terms of volume and the sales. So definitely the capacity utilization has gone up, and even the throughput of coming out with more meters, that is happening, and we see this trend to continue well beyond in the next 15 months.
So this trend in revenue trajectory, what do
Sorry to
we...
interrupt, Mr. Aman.
Aman, your voice is not clear. Can you
Hello,
just...
hi, am I audible now?
Yeah.
Yeah. So this growth in revenue trajectory, what type of quarter four do we see? Will it be because quarter three was much more expected from the market side of it, but we couldn't see that realizing. But was there some postponement of revenue or any contracts or some recognition was postponed to Q4, sir? Or is it some other way? Matlab, will
Sorry, I
Q4 be
didn't
more
get...
than...
Aman, sorry, I couldn't get the first part of your question. Just...
No, sir, I was asking, sir, quarter three, revenue was not as much as expected in the industry. But do we see any, have there been any quarter three revenue which was been postponed to quarter four or the coming year, or we are in the initial stages of realizing the revenues from larger contracts?
So you were talking about meters?
Yeah, meters particularly.
So
Meters and whichever...
in the meters and the systems division, we have done 169 crores net of taxes. So I think in a way we have been growing in that. Of course, there's always a scope for further growth and improvements. But I would say this figure would go up probably even in the Q4 based on the schedules and production, what is happening. You also have to realize that each of the product which is made and supplied to the utilities or the distribution companies, they go through a mandatory dispatch inspection.
True, sir.
Sometimes it does happen that some materials are ready and they get postponed to the next one. But in the current case, I don't see any, although there could be some natural tendencies, but as such, I think whatever was scheduled has mostly gone out. So we would see, we have pressed schedules for the Q4, and I think that would be there already underway, and we should be able to achieve our target, what we have internally for the current quarter. Yeah.
Okay, sir. Sir, this year we have done...
Sir, may we request that you return to the question queue? There are participants waiting for the answer.
Yeah, sure.
Thank you. The next question is from the line of...
Thank you, Aman.
The next question is from the line of Subrata Sarkar from Mount Infra Finance. Please go ahead.
Hello. Hello.
Yes, sir. Please go on.
Yes, sir. Sir, a few questions. First on the metering side, sir. So metering side, sir, we have seen like a lot of tender has been floated on the AMI SP level, and few of our companies, competitors are actually bidding for AMI SP order also. So I suppose we don't want to bid on the AMI SP. If you can clarify on that. Number one, sir. Second, sir, we have received orders. So now I have two questions. One on the supply side, sir. So at optimal level, how much quantity and what kind of revenue we can do with our existing capacity? Number one. And second, sir, if you throw some light on regarding this metering about the working capital requirements, sir. We already have around 500 crore. Debt on our balance sheet. So, how much we want to leverage further, or what is our strategy on the working capital side and the capital side on that? And second, sir, vis-a-vis, sir, although we have seen quite significant growth on the metering side, sir, but another part of our business, as per our segmental revenue, that's not really picking up. So if you can throw some light on that, sir. This is my initial question.
Yeah, sure. So in terms of our capacity, our normally declared capacity is at 9 million meters, which is 90 lakh meters. So I think we can do anything between 9 to 10 million meters based on our current capacity. So currently, as I said earlier, we are probably around 65% of that. And I think in terms of the orders and the inquiries, what we are seeing, so I don't see capacity as a constraint, because even if whatever the orders which are coming on from AMI SP also, many of these supplies are to happen in the next 24 to 27 months. Then there is also a lead time before the the AMI SP does the initial work and the supplies start, and then, there is the initial work is there. So overall, although the suppliers and the inquiries which are coming are very large, but I think there is a sufficient time to do that. But however, currently we are working on a good capacity level. We are seeing it increase quarter on quarter. So in terms of that, we don't see any capacity constraint right now on that. As I said earlier in my last reply, that there is a lot of process automation which we have undertaken, because under the new guidelines, if you see a lot of the standards are much better now, so the quantities are coming based on those specifications, based on those standards and the guidelines. So, as they become much more standardized, it becomes easier to produce larger numbers, and then thereby bringing down the cost of production per unit. So that's how our teams have been working on that. Now, coming to the working capital requirements, yes, traditionally, if you see, the meter working capital requirements are a little high. The debtor days are normally around 180 to 200 days from the electricity board. Now, with the introduction of the AMI SPs, if we are supplying them smart meters as a component, we see the working capital cycle to improve. And of course, it's now in the initial stage, but as this picks up much more, we definitely should see a improvement in the working capital cycle going forward. So because this would be a supply against either on LCs against bank LCs, and thereafter they are taking the responsibility as an AMI SP and financing it for the 8 or 9 years, whatever is there. So as a company, we are focused on more into our core focus, which is manufacturing and supply of the smart meters. So we are currently supplying to the electricity board, to the private utilities, and also with the AMI SPs, with most of the AMI SPs you see around right now, they've already tested our meters, and the inquiries are on. So we do hope big orders to come by from these AMI SP. Regarding participation, independently as an AMI SP, I don't think that is something what we are looking at. With joint venture partners, where who could be financing it, yes, we have definitely explored a couple of options, but I don't see anything much happening right now on that. We have a lot of business which is already with us, and the future business for what we expect, that is mainly on the supply side of the meter. So the working capital, what we have, we don't see ourselves leveraging more from here on. But with the supplies happening to the AMI SPs, definitely we see the working capital to become better. Now, this is for the meters. When you look at the trade market, where mainly the consumer and industrial products are going, that is there again the channel financing is increasing. I think every quarter we are increasing the footprint of that, and I think, as we have said earlier also, by the end of next year, we do expect a very vast majority of our business happening through channel financing, which would thereby bring the working capital requirements in the consumer and industrial segment pretty low. Now, regarding the third question, what you asked on the performance of the consumer and industrial part, yes, in the last 4 months, we have seen certain let's say sluggishness in demand or a little slow sales. But prior to that, if you see, the growth in the last 2 years has been over in a high digit of over 20% plus. So the base has been high, but nevertheless, I think certain actions and refocus what we have given, we do hope that within the fourth quarter, we should be again back with a double-digit growth, and thereafter, even next year with the introduction of a lot of new products coming in, a lot of new markets what we are looking at, I'm sure we should be back in that. But I don't see any a big cause of concern or something like that in that. But yes, in the market it may happen 1 or 2 months. Sometimes we do see certain slowdowns in a way.
Okay. Sir, one follow-up on our capacity, sir. You told like 9 million is our total capacity, sir. Yeah. Hello?
Yes, please.
Hello? Yeah. So out of this 9 million, sir, how much can be smart meter, number one? And sir, if you can give us some idea of the peak, you have given it in terms of volume, some idea about the revenue also, because you understand, sir, the almost smart meter cost, the price is almost 3x to that of a ordinary meter. So if you can give some monetary numbers also, like this 9 million rather, transferred into how or what kind of a like rupee number also, sir. Particularly since, sir, now there is two type of meters. So vis-a-vis, and how much is we can do in terms of smart meter?
Yeah. So in terms of, if you see currently, although most of the tender inquiries are now of smart meters, but also we have still seen that even the conventional electronic meters, the demand is still good, and a lot of state utilities are also giving those orders. So even that flow is continuing, and even in the near
Yes,
term,
sir. Yes, sir.
we do see that also to continue. If you look at our own order book of over 500 crores, about 60% plus is right now of smart meters. The 40% is almost of the conventional electronic meters. So by the time this changes, it may take some time, until the smart meter becomes fully relevant. Theoretically, all the 9 million meters what we make can be converted to smart meters. So as such, the unit values go up. Maybe certain processes might be extra, but as such, the entire capacity with a lot of use of existing machines and the infrastructure will get converted into the smart meters. So this 9 million remains like this, but we should be over a period of time, as the demand comes in more for only the smart meters, we should be able to convert this into smart meters. In terms of values, yes, the per unit cost of meter, along with a lot of services or add-ons what are there, that the unit costs are high. But right now it would be just probably just giving an estimate without a listing on what the values can be. But in terms of, if you look at the market size, the way it is set to grow, or even the tenders which are there, which currently would be in excess of even 10,000 crores or even much higher than that. So I think overall the values are set to grow once the quantity converts to the smart meters. Yeah.
Sir, the current smart meter unit price is around 5,500, 6,000, sir. Is it right understanding?
No, it depends on the tenders and depends on order to order on what the customer wants. So it is, it can be that, it can be even higher than that. It depends on what are the requirements for meters.
Okay. But the 6,000 around is okay, it can be higher, sir, but at like around 5,500, 600, it is right assumption, but sir,
No, it's
ballpark number?
it would be difficult or just a guess for us to do that. But I'm sure when the orders are coming out, because these are all public information, so I'm sure you will get to know that. But it's difficult for me to just give a single figure of what that would happen. But yes, it is 3x or 5x higher than what the conventional meters are. But that again depends purely on the customer requirements, the tender terms, the other structuring, what the utilities would do.
Got it. But sir, we are only like, sir, as per my understanding, there are two part of that business. One is the upfront selling of the meter, and the second is the kind of a AMC cost, sir, AMC charges. So we are only on the like manufacturing part of that business, sir, right now.
Yeah, right now we are looking at supplying the smart meters. If we are to supply to the AMISPs, then it is basically a supply order with the subsequent support on the warranties. The other IT infrastructure or even the maintenance, the O&M part, what they say is, that becomes the role of the AMISP, yes. But then that is spread over the period of overall 10 years,
10 years, sir.
3 years of supply and then subsequently, I think about 7 years of support. So, and then they would get their payments also in the 8 years, I think, by equal, like an EMI. So that's how it is structured here. So yes, our focus is mainly on the supply of smart meters to the AMISPs and to the utilities. Yeah.
Got it, sir. Sir, a small understanding, sir. Let's say somebody is quoting 100 rupees for a AMSP. So how much will be like, very approximately, how much will be, sir, the meter supply out of that amount, and how much will be maintenance O&M charges for over 10 years, sir? Any rough idea, like is it 50-50 or what, sir?
It's again maybe difficult to standardize, but yes, just as a ballpark figure, you can say 50 to 55% could be the meter cost, and balance could be the other services which they provide over a period of time.
Thank you. We'll move on to the next question. That is from the line of Sri Harsha, an individual investor. Please go ahead.
Afternoon, everybody, and congratulations on delivering a good set of numbers. Sir, is it possible to throw some light on the order booking for 23-24 and the revenue and EBIT margin?
Yeah, in terms of the order book, what we have currently is around 879 crores, and we are also looking at a strong quarter as in Q4. But I still would say that despite a good quarter in Q4, our order book at the end of the year, at the end of March 23, should be much higher than this level. So in a way, for the next year, when we look at the 23-24, the financial year, we do expect a strong order book at the start. Now, when we look at the way both the businesses are structured, our metering, of course, has a very strong pipeline of tenders and inquiries. So again, we would hopefully get a couple of large orders going forward. And so overall, if you see the revenue guidance, I probably will not put a specific number now, but maybe by the end of the year, we should be able to give a more specific guidance for both the divisions. But definitely, it should be at least on meters, should be a high double digits in that. And even the other consumer and industrial also, I think if you look at the last 2.5 years, we have seen a good growth. The last couple of months has been a little slow, but I think as we get our act together, I think by next year also we should expect at least a decent good double-digit growth even in that. So I don't see any reason why that will not happen. So overall, I think this year, the guidance what we had given at the start of the year, we are looking to achieve that with around over 20% growth. And I think almost a similar growth, something we should be able to look at next year as well.
Okay. Another question, sir. Like you were saying that the order booking for smart meters is very huge. So if you are able to get such huge orders, is it possible to hit the requirement with the existing capacity, or you are having any plans for expansion of the smart meter facility in order to meet the demand for the smart meter?
I would say in terms of the outlook, what we have, even covering the next 15 months and a little beyond, I think we have the capacity to meet the requirements. You also have to understand that a lot of large orders, especially the orders coming in through the AMISPs, they do have a supply time of almost 24 to 27 months. And plus, there is also a time lag by the time the order supplies would start. So roughly looking at the delivery schedules, I think even if one gets in a large couple of orders, with the pace of schedule of supplies, what is there, that should be we should be able to easily do it. I don't see that as a constraint.
Okay, sir. Thank you. Thank you, sir.
Yeah. Thank you, Mr. Harsha.
Thank you. The next question is from the line of Nidhi Sharma, an individual investor. Please go ahead.
Good afternoon, everyone. Hello.
Yeah, good afternoon. Yeah.
Yeah. Okay. So I just had one question. Can you please highlight how we are expanding on our product portfolio? Have we launched any new products, in this quarter?
Just in this week, we have Electrama, which is a very large exhibition, which is happening in Greater Noida, very close to Delhi. And in fact, the products on display there are, I feel, in each of the divisions what we have, whether it is metering, switchgears, and switchgears also includes the industrial switchgear, the domestic switchgears, and also the solar solutions what we have, wire and cable. So each of the divisions we are launching a lot of products. So there is a new range of modular switches what we have. There are a couple of new lighting products what we have here. Also a couple of specialty cables which we have been focusing on. So this quarter, because by chance it coincides with the Electrama exhibition. So the teams have been working on a lot of new products, and so that's how we have. So there's a big range of products which are getting launched, and most of them are of course for immediate supply, but some of them we would be in the market by end of March or beginning of April.
All right. Thank you so much.
Yeah. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Aman from Kawad Investments. Please go ahead.
Yeah, thank you, ma'am. Sir, just to continue, I just want to, as claimed by us, we have nearly 20 to 25% of market share in the smart metering and the metering segment. And as informed, and also tenders of over 10,000 crores have been floated by various state utilities. In this, I have two questions, sir. How much value of tender are we targeting, and which location are we targeting? Is it Delhi, Haryana, Madhya Pradesh? Which particular state utility are we targeting? Sir.
So if you see in terms of value of tenders, because for us we are not targeting most of the AMI SP orders, although we are associated on looking to supply to the AMI SP winners, so that's how we are structured. But in all, if you look at it right now, anywhere between 10,000 to 15,000 crores is the specific requirements what we have been either on tender inquiries or on inquiries from private players. So there's a huge amount of interest or inquiries which are floating around currently for the smart meter supplies. So that is how we are looking at it. Traditionally, if you see almost in the last 10-15 years, our market share has always been around 20 to 25%, as you said. And we have maintained that even when the markets have been going up. So our endeavor is also to, firstly ensure that we have that kind of a market share, which I think in terms of certain orders and what are getting finalized, we are maintaining that. But it's too initial. It's at a very initial stage. I think when a couple of more tenders come out, then I think the market shares would probably settle down. But in terms of values, yes, it's a huge requirement currently, and we are participating. Now, we are not anything. So when we look at the business, we are a pan-India player. So we don't, as such, distinguish between any location or something like that. But as and when the inquiries are coming out, we participate. So practically in every state utility or even a central utility, being private utilities, anywhere wherever the requirements are coming, that is where we participate. If you compare us with a lot of our competition, we also have a large consumer and industrial division. So thanks to that, our meters also go into the private market in a big way. So we have a huge range of products, be it panel meters or even meters on the secondary market. And so that is what we also supply through the dealers, distributors, or to even the real estate or a lot of the OEMs. So in that term, the business potential, of course, is pretty large going forward.
So just to add on that, just to ask on the follow-up, have you added any new customers on board, large customers in quarter three?
So in terms of, you're talking about the smart meter?
Like, say, customer or a state utility which we have MOU with, or which we have entered a formal agreement with for a certain level of order, which is little bit extraordinary.
Recently we did announce.
50 crores, that's value.
Yeah. So recently we had announced that we had got an order of about 162 crores from a private utility. And so this was like a repeat order what we had got. And so it's of course a very reputed utility. And but this is again, we would expect going forward much more repeat orders coming in. And gradually, if you look at it,
from the same utility, sir, or some other utilities?
From the same private utility. And gradually, as we are seeing, their systems are, HPL Electric is a preferred smart meter supplier in their system now. So over a period, as they also get more committed, we would have much more repeat orders coming in. And I think that is the idea of having dedicated customers in this, because smart meter is going to be a long-term game. So in the sense that once a utility is putting those meters, then they would, probably come back and you use more of those meters as and when the demands are growing. So yes, the repeat businesses are coming, but each of these businesses are tender on tender. Of course, as a private player, they might have some internal, the choices would be.
If you can just highlight, from revenue, from how much revenue do we get from private player, and how much revenue do we get from tenders?
So it's right now, probably from that single utility, we have orders worth almost let's say 320 or 330 crores. But you have to realize that it's too early right now, because we are into just about few months into the whole supplies of the smart meters. So
what is the turnaround period of these orders? Are we satisfying in 3 months, or what is the turnaround period?
So these are almost 6 to 9 months, I would say. So that's why the repeatability will happen. But if you look at the other
formal agreement,
sorry?
Is there a target of this much has to be achieved in supply? Is it there in the pipeline, or is it one time, as and when required, they raise the orders?
So they would, I think they would, this is it's of course their decision, so I cannot answer from that behalf, but typically, each one would have their purchase strategies. But if you look at the AMI SPs, I think they are looking at much longer duration for procurement. So the tenders are larger, and the supply periods are also minimum 3 years, and then extending on to the maintenance part. But as a private player, yes, they have a choice. But I think the requirements, what we currently have, is almost 6 to 9 months. But that can change based on their choice.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Mudit Kabra for his closing comments.
Thank you, Lizanne. We would like to thank the management of HPL Electric and Power for giving us an opportunity to host this call. We would also like to thank all investors and analysts for joining the call. Any closing remarks you would want to make, Gautam sir?
Yeah, I'd just like to thank everyone for joining on this call. And I just feel that, the opportunity again, whether we take smart meters or even our consumer electrical business, I think that remains pretty strong going forward. And as management, we are well committed to ensure that we achieve the objectives of the company here. So thank you all, and in case of any query, you may contact Dickinson or us directly for that. And I wish you all a great evening here. Thank you, and we can close the call now.
Thank you. Ladies and gentlemen, on behalf of Elara Securities Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.